everybody. Welcome to Market Mavericks. Of course, we are all here to go over the craziness in the market. Bitcoin is down huge on the day. Silver is collapsing. The stock market continues to decline. Where are we? We're going to talk to all three of us, or we'll all three be giving you guys our opinions. Of course, I'm here with Scott Melker and Mike McGlone, the original Market Mavericks, with myself. And where do we start? Do we start with Bitcoin here? Scott, you want to lead the charge here?
I can. I think everybody's in a lot of pain. This has absolutely been brutal. As you can see here, today's candle especially, not that we haven't had a major sell-off going on for a very long time, but you take a look at this volume, right? I mean, you've got basically a week of increased selling volume leading into a massive candle that's sitting at the daily lows, right? It's called a Marbozu candle for those who pay attention, but not what you want to see if you're a bull, when you have a candle that's pushing to the lows, no bounce, no wicks, on extreme volume. Now, that can also end up looking like capitulation. On the more bullish side for a bounce, this is the third lowest that daily RSI has literally ever been in history. Wow. For oversold conditions. 2018 being number one, the lowest, and 2020 COVID crash being second that March, and we're about to tap that as we speak. And the weekly is now oversold for the first time, and you know that RSI tends to go oversold, overbought for the first time on Bitcoin in years, and only the fifth time in history, going all the way back to, pre-Mt. Gox. So just to put it in context, I mean, this is historic selling. This is hideous. I think a lot of people are watching very obvious levels at this point. I'm sure you guys are too. You got the 200 MA down here on the weekly. Every time we've ever broken below the 50, I've been talking about this for a long time, you do tend to visit it. Did I think that was definitely going to happen? No, I don't know. But that's at 58. The 50 MA on the monthly is right there at 57,000 as well. And Ryan, my producer, showed me that also that price would be the first time I think that Bitcoin would be like below the cost of electricity, some metric about mining that would be major capitulation. So there's a lot lining up with that area. But listen, let's be honest. I mean, this is disgusting. This is what certainly, Mike, you've been talking about for a very, very long time, regardless of what price it started. I mean, there's even some headlines. Did you guys see the Bloomberg headline? This one is just, you've got your screen.
Okay, let me flip back to you. Let's see.
Bitcoin drops below 70,000, wiping out gains since Trump's win.
Wow.
Below the price of Trump's election. So the entire, basically, gains from the tailwinds of a pro-crypto president completely gone. It's disgusting, but for me, it's a bit euphoric because I would have been buying Bitcoin right now at 150 if things had gone the way I liked. So I'm getting it at more than a 50% discount.
Mike, are you thinking that is this just de-risking basically going on? I mean, there's nothing fundamentally with Bitcoin. This is more just people saying, hey, listen, I've had enough of this and I'm out, right? Or what?
I think this is a setup that's going to be as bad as 2008. The historic fact that I can make a statement that just about a week ago, silver reached the highest ever versus copper and crude oil, and the parabolic rally in gold and silver was the greatest in almost half a century. And now they're starting to reverse. And what's happening in cryptos, I mean, I'm going to show you a few charts, but I look at this right now as I've seen some of the D's in life, death and divorce, from these and I expect this is going to happen. We're going to hear stories like this. So first, right now as we speak, MicroStrategy's dropped down to 109. It's going to break the buck, I think. We'll see, and what's going to happen with the next earnings announcement. But I want to show you a magic little trick I learned way back in the trading pits. Is define a significant time, and that mean when the market moves away from that mean, you always go back to that mean. It should be support. So this is 2024. 2024 was the most significant year ever. I think we're going to look back in history as that was the year that marked the end of the beginning of the end for Bitcoin. Obviously, it really culminated with Mr. Trump getting elected. The mean and mode from that year, basically the mode where you traded the most, was about 64,000. You should bounce from that level. Now, I've seen sometimes in the past, I remember looking at a chart like this almost 35 years ago in a trading pits with a customer making some good money. And then sometimes you gap below those levels, and that means it's all over. But we're supposed to bounce from 64,000. But the key thing is I just also overlaid this with the stock market. This is what I'm trying to do now. And I have editors. I just sent to editors. I want to use my headline for tomorrow is cryptos got trumped. Is the stock market next? And that to me is the key thing we need to be thinking about here, because cryptos are on a big picture. Macro, a couple trillion doesn't matter. S&P 500, 72 trillion and 2.3 times GDP. And I just want to show you a few charts real quick, and then I'll lay low. This is a monthly chart of the S&P 500 overlaid with the Bloomberg Galaxy Crypto Index. 60-month moving averages are exactly the same. This is auto-correlated charts. They just were spot on. Bloomberg Galaxy Crypto Index is probably down here. It hasn't closed out yet, but it's broken below that 60-month moving average. It comes in right around 5,000. I want to show you a key chart thing I've always loved about candlesticks. Remember, this was a key. The candlesticks really gave some great indications back last year. Remember, it was stuck around 3,000 and just left these great tails. Well, here's a huge tail on the monthly candle S&P 500 from April. That tail, I think, is going to be covered. Means going back to 5,000. That's a massive trade, but normal. And this is the one I've showed before, big picture. Just look at the annual chart, S&P 500 divided by GDP, the Warren Buffett model. Basically, we were 2.3 times GDP. Right now, it's the highest in 100 years. A potential rollover on that. That's what I think is going to happen. And then again, I show you this Bitcoin. You look at an annual chart on Bitcoin. Look how far that's gone. 10,000 on Bitcoin's nothing on a normal chart like this. And I just want to end with my favorite indicator. My favorite market still remains Treasury long bond. It's stuck, maybe bouncing near 5%, but on the same chart, same scale, I have natural gas, copper, and corn. What's the outlier here? Copper. It's the one, I said above 6. I still think above 6 it was a worthy short. Maybe you moved your stop down a little bit. I still think it is. And I spoke to a few people this week in Hong Kong, and everybody's so bullish of the metals. It feels to me just like cryptos were last year. But to me, this is something that's just happening. Natural gas is broken down. Corn, obviously, I'm a commodity guy. But the whole thing, I think, is going back down to the 3 level. And that's including bond yields.
So what you're basically saying is that the economy, to see copper go down and everything else go down, the economy is essentially going to have to collapse. And I guess that's what you refer to when you say worse than 2008, right?
Well, but the difference is this time, what's going to lead everything is just what we have. The 2 best examples in history is the recession will be drawn in the back of wealth destruction, and that is stock market going down. That'll be everything. When you lose money, you cut back on your spending, and people are so accustomed just 3 years in a row, 20% returns, and let's just get another year that it's so priced in. But to me, that's the key thing that's going to be happening is there. The wealth, just a 10% correction in the stock market. We all forgot about it. It's almost 25% in GDP, but it's also the timing and the indications and just the fact that cryptos have broken down and what's happened in the precious metals. I switched over from the word I'm still using the word more terrifying now, what that means when they rally at this velocity. And now they're collapsing. I mean, silver can easily go back to 50, but these things that are happening in the markets, stuff that I haven't been able to, I might not ever be able to say again that we're at the most expensive versus a 60-month moving average in gold in 50 years is stuff that you have to respect. And for now, it's just a day, but let's look at the big picture there. I stick with the theme, and I'll end with this. The whole thing's happening with S&P 500, 180-day volatility is still resting at the lowest level in 8 years.
Wow. Yeah, and I think this is for a lot of people, right? I mean, we've kind of been lulled into Bitcoin going lower, but this is a huge move on Bitcoin. I mean, silver, again, people were euphoric. We know we saw those greed signals like we saw in crypto back in October in the silver and the precious metals market. And really, again, I got this sense, and correct me if I'm wrong, Scott and Mike, but if you looked at how people feel or even how they still feel about the stock market, the feeling is that every dip is to be bought because the Fed will never let the stock market go down. And that's, to me, always something so scary to hear that, right?
We've been saying it forever, and at some point it stops working. And just by the mere fact that I know people who've held precious metals in their accounts and can measure it in decades, and were selling last week because they just get too expensive. And they obviously have the sell side trying to get you to buy more, which happened in cryptos last year. But this is just very scary. And some of those prudent people are taking that money and putting it into long bonds. And that's what I think they're supposed to be doing. To me, and that's also, I love when people talk about the smart money. The key thing is Michael Saylor's supposed to be smart money. And if this continues, he's going to get stopped out.
So, Scott, do you go near Solana at these levels. I mean, Solana is down massively. Look at this right now. Solana is at $81.75. Like best of breed. Obviously, Bitcoin's kind of number one, but and I know that's the majority of what you have. But do you play around a little bit here, bottom fish a little?
Yeah, I mean, I use Arch Public algorithms to buy. I have a fixed portfolio, and it buys sizable dips, on daily, and I have it running on daily candles for Ethereum and Solana. So I will definitely be buying some Solana today.
What about XRP?
Like you said, though, it is somewhat fractional of what I buy for Bitcoin. So,
right.
It's like a 80-10-10 or 70-15-15 kind of thing by the time I'm done. Yeah.
What about
it actually trades Solana and Ethereum, so it sells bounces as well. So it's a little less. What about that? No, I want nothing to do with that. When I look at that, and that has nothing to do with the asset itself, I looked at the chart the other day. You have it drawn exactly as I do. It was sitting at an incredible support, but which to me was a generational risk reward, right? If you bought that box and you had a tight stop, you move on with your life and you're wrong. That's great. Right. People are actually very angry at me. I wrote a tweet that said, great risk reward to buy XRP here if you like buying support, right? Because you can cut it if it breaks.
Exactly.
Of course, then a bunch of crypto media picked up on it and said I was saying that XRP was a generational buy opportunity or something, which I would have never said for anybody who knows me. But then you stop out really quickly and you move on with your life. But what I also said in that tweet was, if it breaks, there's an air pocket down to below $1 and there's no reason. Look at that.
Cents. Yeah.
Nothing there.
Right down to 50 cents.
There's nothing there.
Yeah.
It's that to me, that's setting up for an island top.
Do you think that there's a battle now being waged between the banks? Like, we've obviously heard the banks aren't so happy with this crypto deal, and then Coinbase got upset and was like, no, we're not going to do it. Like, obviously XRP is intricate in the financial system. Is there something going on here that's bigger? Because this is a massive move on XRP.
A lot of people I don't know about XRP specifically in this case. I've heard for years about how intertwined they are with the financial system, but it seems like they're building something, but maybe not as intertwined with the legacy systems that exist. But there is a major theory going around. Novogratz somewhat floated it. Then I saw John Deaton talking about it, that we're seeing basically what happened with silver in the past with the banks, JP Morgan and such, who are taking advantage of the opportunity to, short paper Bitcoin, as they did with paper silver. And that could be the reason that we're seeing this massive sell-off. Largely, I'm not saying that none of that is happening. I do think the banks obviously are impacting what's happening with the Clarity Act. They definitely don't want this industry to succeed on its own without having their fingers in it. But the truth is, there's just a lot of people selling, and there's a lot of evidence of that. So I don't know that we need to cope and find a heel, like it's the WWE, an enemy. I don't think Bitcoin's down because of Jamie Dimon. Personally, I think that the early whales have sold and they continue to sell. I think people blew up on 10-10 and there's some systematic selling from that. Yeah. I think this is it's unwinding. It's unwinding the whole Trump years. It's unwinding the push too high.
Do you think... Oh, sorry, Mike, you go.
Well, I just want to ask a question. We had this theme way years ago, certainly when in 2020, when Mr. Saylor started jumping in around 10,000, that was widely disseminated ETFs will put the peak in the market. And of course, Trump got elected and that had put in a double peak. But to me now, the low is going to come when you purge stuff like Shiba Inu that's still worth $3 billion, tracks nothing, and Dogecoin that's still worth $15 billion and tracks nothing. To me, that's the stuff that needs to be purged. And then we'll put a big bottom. So I don't ultimately see a bottom in the whole space until we get a decent washout in the stock market. And I don't know how bad that could be. It could be a 50% drawdown. We've had two already since the beginning of this millennium. We're way overdue. It's such a setup for that, which means a normal recession because of that. And just to get those millions of cryptos that track nothing, that are numbers on a screen that people are so emotional about, which is the worst thing to ever do in a market, just purge them, and then we'll find a bottom. So I think right now we're supposed to be, it's a key thing to remember. This is an awesome trading environment. And Scott and Garrett, this, the best rallies come in short covering rallies and bear markets. You're going to get some great opportunities to have 10, 20, 15% pops. But the big picture, I think, is looking for those pops to be getting into prudent shorts. And I still look at in the macro, Bitcoin is a prudent short. You're supposed to be lightening up a little bit around here, 64,000. Copper to me still looks like a prudent short. Natural gas, well, that you don't want to short that. Crude oil potentially, if you get a little pop and something in the Middle East, shorting that. Copper, prudent shorts. And the bottom line is still we haven't had the thing to really kick them in yet. And that's I want to see it some normalization in stock market volatility. It's still buried.
Yeah, and just from my personal perspective as a swing trader, I am nibbling on IBIT today. IBIT, again, the ETF that tracks Bitcoin, mainly because the old adage goes, when there's blood in the streets, buy, right? Yeah. And all I care about is the short covering bounce. Yeah. Give me 15 or 10% even, and I'm out of this trade. But I do think today, with the volume that Scott showed, those are signs that maybe there's a little bit more, but I'll DCA down there. Maybe we go to 55, whatever it may be. But ultimately, I think we'll get a big bounce, $10,000, $15,000 bounce on Bitcoin at some point. And it wouldn't even shock me. At some point, I do think that Trump may try to show up for crypto. To be honest, if he doesn't, that's a little messed up considering the promises that were made early on. Not that I think he cares that much, but I could see him trying to stabilize this since so much of the core was voting for him, right? I mean, that's really what he wooed the crypto crowd like crazy.
So just let me follow up on that. I called it a Faustian bargain at the time. It's a Faustian bargain that's unwinding. He got elected. I don't think it's top on his list of everything that's going on with that administration right now. He might, but is it going to help him get elected? The primary focus right now is the midterms. And he's got to do something about the inflation issue, and maybe the market will do it for him. And I think they might have figured out stuff we talked about a year ago. You just get a little backup in the stock market, and all those issues he wants. You want lower yields, you want lower energy, you want the Fed to ease. It'll all happen.
Yeah. Yeah, amazing stuff. And let's flip over to silver real quick. Silver getting smoked today, down about 15%. It hasn't taken out the low from Monday, but needless to say, when you see a bounce on silver this week, that's never a good showing, right? I thought it would at least do a 50% retrace. It only hit a Fibonacci 382, and now it's right back down. I agree with Mike in this, is that this likely will break this 71.5 level, and we're probably in the next few months going back to 50 to 55, which is kind of those highs from 1979 and 2011. So there'll be a retrace to the former breakout level on silver. But
Gareth, we went from 120 to 70 in 5 days.
Exactly.
We could be at 50 in 3 hours.
Exactly.
Yeah, and so speaking of all this volatility we're talking about in these peripheral markets, how long can the stock market avoid that without some real volatility? I mean, we're so overdue. To me, that's the trade. This is just warning us.
Yeah, no, I agree. Now, so we have gold. Now, one of the things that I do think is interesting that I want to bring up here is gold, right? So you look at silver down this much. Remember on Monday, gold was down at one point like almost 10%, I believe it was. Gold today is holding up better. And I wanted to get your perspective on this. Is this because everything is selling? So stocks are selling, and we'll look at the NASDAQ soon, which looks like a beautiful rollover here to continuation. But stocks, Bitcoin, silver. And there's got to be some money that's probably saying, okay, well, at least gold is gold. Let me go into that. Would you agree with that, Scott?
Yeah, I would. I don't think that silver and gold are the same, and people conflate them, unfortunately. Yeah, like I said, I think I think of everything through a crypto lens. So gold is like Bitcoin, and silver is like the altcoin market. So, you can see a major downside on altcoins, and Bitcoin kind of moves a bit because people run back to Big Daddy, right? So and like you said, I mean, I guess bonds are probably, I don't know, dollars up, right? So probably rates are down. I don't know.
Yeah, the 10-year is down substantially today, which I think is that same thing. It's a rush to safety, right? Bonds are being bought because everything else is essentially dumping. I also think that we had jobless claims today, which were 231,000, which by itself is nothing to make a big deal about. That's actually kind of normal for a good economy or solid economy. But we were at 200 to 210. So it is a jump in the people filing for unemployment. And then the Challenger, did you have that? Do you have those numbers, Mike, the Challenger numbers this morning? Because it wasn't a good picture, if I remember correctly. In fact, I think Amazon, UPS, and one other company made up a majority of those layoffs. And anyways, that's what I was hearing. But again, we are seeing some of these bigger companies cutting a substantial amount of workforce.
I think that's part of what we're going to look back from the future and say, this is such a substantial paradigm shift with the switch to AI. Here's the Challenger cuts,
And
100
jolts, yeah.
jolts cuts. It's so much, I didn't even really notice it. I mean, a little bit of a bounce there, I guess. But it's the transition. We all know new technology is massively deflationary. Jeff Booth, quote him, he's awesome. But it's a transition from new hires are finding a hard time. AI is replacing everything. Every company on the planet is doing everything they can to be efficient to pump their profits with AI. They're not hiring. They're laying off. It's the transition time. But it's the key thing that I think is this data. It's something you look at, then you look back to the market and say, where's it going? And to me, that's the 10. Is when you're this high, it all trickles down from the stock market. It has to go up. So I've had conversations with these people this week who are bullish copper, and I said, okay, so do you have S&P 500 right next to your copper on your value at risk model? And they asked me, and they look like I have three heads. I'm like, well, if the S&P 500 drops 10%, copper's dropping 20%, almost guaranteed. It's we're at that stage, and it's so stretched. Like I said, this, like, I mean, by 2008, though, it's just going to be I mean, for me, it was one of my best trading years ever because I just would stay nimble, and took opportunities and just sold rallies and bought puts and opportunities, and we bought a few dips once in a while. To me, and what are you looking at there? Is that copper?
This is the NASDAQ. So one of the things I want to bring up here, and this is something that I kind of thought about last Friday when we went into the weekend after that huge drop in silver and gold, and then we saw Bitcoin falling over the weekend, is that essentially this was the beginning of dominoes, right? Essentially, as people get scared in silver, they exit. They get scared in Bitcoin, they exit. And then it eventually bleeds into other assets. And so the stock market was just a matter of time. And we've seen, I think, on the NASDAQ about a 6% drop just from about a week and a half ago. But again, look at the trend line here. I mean, this is just amazing how we came to the line, we bounced, we came to the line, and look at each bounce is shorter lived until we finally break down. And then you do a classic retrace to test the underbelly. And then we come down. And again, classic technical analysis there. I think it's so amazing to look at that. But to me, this tells me we're going lower. Like, sure, we'll get bounces. We all know bounces occur. Nothing goes straight up or straight down generally. But this is not a good chart on the NASDAQ. And look at the earnings, right? I mean, Microsoft, AMD was down almost 20% yesterday on earnings. And these earnings are good, right? Even Google, right? Alphabet. They had amazing earnings, but they're going to spend $170 billion on spending, right? CapEx. And these numbers are so massive that the questions being raised now is, are they ever going to make money from this investment or enough to recoup the investment? And I think that's something that's going to come into AI here. And again, we are seeing it. Now, Google's come back nicely off the lows. You can see great bounce, but still down on the day. It's going to be interesting to see.
I appreciate you mentioning that, Garrett, because to me, this is how these things really happen in bull market peaks. Earnings have been awesome, but prices have just stopped going up and they start underperforming. That's what our equity strategists have been saying. Yeah, earnings have been great, but the performance has been poor. And that to me is typically how it happens. And everybody knows you always get a dip to buy in the equity market every year. And we're still, 5%, 6% above a 200-day moving average. Haven't touched it since that little swoon last year. So I think almost every trader gets it. I still don't see why anybody should be buying any risk assets until you can at least say beta is below its 200-day moving average. And the VIX where we are right now, 20% pops up at least a decent level. 20 is 19's historical level, at least 30 or 40, and get just some normal corrections in markets, and they're just getting started. The key thing, like I said, though, is we've just never had this stuff happen with the peripherals, like you just pointed out, silver and gold going up so much, and that's the problem. I think when we look back from the future at this year, we're going to see that everything is going to go down, meaning silver, I think, is slowly going to end the year down. Copper is going to end down. Even gold might end down because it's the power of the margin call. And main thing is they went up too much. They just went up way too much. And you look for value, and here's the thing is, I've been wrong on bonds for 3 years, but when that rally gets going, it's going to suck in everything, I think.
And look at this, guys. Bitcoin, and I can see, Scott, you're over there buying Bitcoin. I can tell right now. You're entering orders over there. But look at, Bitcoin,
that's the level.
Bitcoin just went almost to 63,000 here. I mean, so this is an all-out massive decline.
83. 63, 23. No, I'm kidding. Yeah,
Yeah.
63.
Oh, man, we might get to McGlone's 10K in no time here.
Well, this is a key level, though. The last thing you want to do is gap below this level, because if you wake up tomorrow morning, or when we start mass trading in the U.S., and we know Bitcoin doesn't close, but here we market at about 5 o'clock. If it's below that level, it gaps below that level, that's the signal it's going to go straight to 50 and then 10, because you're not supposed to gap below this level. And anytime it's happened in history, in my experience, when you gap below a significant mean like this, it's a complete rejection of support. This is a level you're supposed to be buying.
Yeah. And again, just going back on this chart, look at the last time we were down in this range on Bitcoin. You're basically in the midst of this major sideways chop. So generally on technical analysis, this is generally where you'll find some support because of all this chop here. But again, the question is it the lower range, which again, I think, Scott, you said the 200 was around what, 55,000? That would be the lower end of this support range if it gets down there.
Yeah, it's about 50. I'm looking right now. It's about 57.5 now. But if you go to the monthly, you've got the 50 MA there, which, obviously is about as strong of a support as you can look for in that 55, 56 area.
Amazing. Now, we just have a couple minutes left, but I guess the question that I keep on having in my head, and maybe there's nothing that the president can do, but needless to say, you got the midterms, right? This isn't the time to go into a recession and into the second half of the year. But it looks like, what you're saying, Mike, anyways, is that it's almost inevitable. But we have a new Fed chair coming in, nominee, maybe going to be cutting rates, most likely. Why doesn't that save the market? Why?
It's not going to matter. Unfortunately, it's not going to matter because I think the timing's so impeccable. First of all, Mr. Trump might have go down in history as a timing very similar to Herbert Hoover, who was elected in 1928, just bad timing. But worse, the key thing I got from most everybody is the question you have to ask yourself, is he going to let himself be measured in history as Trump's lackey?
Good point.
The point I'm making is the Fed will ease aggressively because the market will tell them to. Now, that's my call. It's been that call for a while. And that's the key thing that's so easy. If we just get this little 10% correction or even 20% correction, we will drop the Fed, that Fed funds at 3.65 or so will go to 2 in a heartbeat because it has a reason. And that's deflationary and it's so overdue.
Wow. And just to think that there's nothing, because again, the whole adage, I've talked to hundreds, thousands of investors, and they're like, oh, well, I'll buy every little dip because the Fed will never, and they'll never let the markets go down. And what you're saying is that there's nothing that can be done. When time's up, essentially.
When you see what's happening in silver and gold, stuff like that, it's the signal that I've been on top of for too early. It gets bet sometimes early and wrong. We're at the end game. How much longer can we pump up risk assets? That's my point. Only 2 times in history have we been this expensive. And they did not work out well in the U.S. in 1930s and Japan for the last 30 years until recently.
Oh, geez. All right. So couple minutes left here. So where are you guys? Scott, I assume you're buying Bitcoin, right?
I should be clear. I have not bought stocks in forever. And I dollar cost averaged into stocks for decades. And I put that on pause many months ago when I started to feel things. I'm interested in buying Bitcoin at these levels, but because of who I am and what I believe about the future, but I would be very uncomfortable dollar cost averaging into most things at this point.
And Mike, is there anywhere besides treasuries to hide at this point?
Nope. Well, there's smarter people who figure out sophisticated stuff. My rule was when markets get volatile like this, KISS, 1S, keep it as simple as possible and seize the opportunity. Some people are getting stopped out, but this is where you separate wealth from people I think for generations. And it goes to the people who are properly prepared for it. This is the kind of year I think we have setting up, particularly when you're a metals trader or a commodities trader. It's just unprecedented stuff. Let's put it this way. I don't think the rest of my life will ever be able to say that silver is the highest price ever versus copper.
Wow, amazing. All right, I think we end it right there on that ominous tone. We'll have to see next Thursday where this all pans out. And obviously it's not going to all play out in a week, but we can give our commentary again. But guys, this is amazing. Just to watch what's going on in Bitcoin live with you guys in this Market Mavericks, and then silver, obviously, and then potentially the stock market. It is not unprecedented. It's happened before, but it certainly is wild to behold. And thank you guys for joining and giving your intriguing analysis. And guys, make sure to follow Scott and Mike below on their handles on X. and we will do our best to be back next week and give you more insights. Thank you guys so much for coming out. Take care.
Thank you, Gareth.